Hello, welcome back to my YouTube channel. Video 4 of Phishing versus Social Engineering. Will your policy cover human error? The hope and the blind spot of human error. Hmm. It is a common belief among business owners that cyber attacks are always highly sophisticated technical tricks like a brilliant hacker cracking complex codes to break into your servers. But the reality in the American corporate landscape is much simpler and much more frustrating. Over 80% of all data breaches start with a single human error. It's an administrative assistant clicking a fake village tracking link or manager responding to an urgent spoof email from the CEO asking for an immediate wire transfer. Today, we are diving into the critical difference between a standard phishing attack and complex social engineering. More importantly, we're going to address multi-thousand-dollar question. If the employee accidentally hands over the case to the kingdom, will your cyber insurance protect people? The classic phishing attack and social engineering. To protect your cash flow, you must understand how insurance underwriters separate this risk. A standard phishing attack usually involves a malicious link or attachment that installs malware, ransomware, or payload onto your system. If an employee falls for this on your network gets locked down, it is classified as a traditional of the mess. Restoring your data and investigating the breach. However, social engineering often refer to us using this email compromise or fraudulent instruction. Fraudulent, fraudulent instruction is completely different. This happens when a hacker compromises an email account and use psychological manipulation to trick your employee into voluntarily wiring money or changing vendor payment details. In the scenario, no malicious software was installed. Your employee was simply tricked into sending the cash. The fine print funds transfer fraud endorsement. The distinction is exactly where many American small businesses get financially devastated. If you only have a basic backbone cyber insurance policy, it might completely exclude social engineering claims. Why? Because the insurance company agrees that your system wasn't technically breached. Your employee willingly authorized the wire transfer. To be protected against this nightmare, your policy must explicitly include a endorsement to know as fund transfer fraud or social engineering efforts. Even when you have this coverage, you need to look closely at the front end, where your main cyber policy might cover up to $1 million for a ransomware attack. The sublimit for social engineering is often capped at a much lower amount, like 50,000 or $1,000, which might not cover the full extent of a major fraudulent wire transfer. Conclusion and how to action. Technology can block millions of tracks, but it only takes one distracted employee on Friday afternoon to compromise your entire business capital. When you review your insurance coverage, just if you have cyber insurance, ask your broker specifically if you have social engineering endorsement and what the maximum payment limit is for funds transfer for. In our, in our next video, we are going to see this and talk about how to actually get a proper policy. When you review your insurance coverage, don't just ask if you have cyber insurance. Ask your broker specifically if you have a social engineering endorsement and what the maximum payout of limit is for funds transfer fraud. In our next video, we are going to shift gears and talk about how to actually get a call for the policies without losing your mind during the strict underwriting audits. Hit that subscribe button so you don't miss it and drop a comment below. Do you currently run regular simulation tests for your team? See you in the next video on my YouTube channel.